Hello, hope you're having a great day. Ed Fontes here. Hey, look what I have. Look at that, the crystal ball. Man, that thing is turning and burning and making all kinds of predictions, right? Folks, there's no such thing as a crystal ball. Where are these people getting their information from? I can't believe it. We'll get into that later. But hey, what do you get when you cross the Atlantic Ocean with the Titanic? Halfway. Folks, we're halfway through the year. How are you doing? How's your family doing? How's your business doing if you're self-employed? How's your employers doing? How's the companies you work for doing? There's a lot of companies, a lot of people going strong, even though we're in a recession. And what do you hear? Yesterday we're in a recession. Today we're not in a recession. Folks, numbers don't lie. We just had the GDP reports come out 2 quarters in a row, negative. We are in a recession. I don't care who you are. I don't care how they say it. They can lie to you and tell you we're not in a recession, but folks, numbers don't lie. We are in a recession, but remember, this is a different type of recession. It is not like the mortgage crisis we had back in 2007. Or we had in 2000, or we had in 1991, or we had in 1981. We have the highest inflation since 1981-82 era. Yes, interest rates at that time were 18%, 30-year fixed. You had a 16% adjustable that can go to 21% the next day, the next month. Folks, we don't want to ever go back that way again, right? We want to just continue and move forward. Where are we at today? Bottom line is I've got to deal with facts. I've got to inform as a professional you with facts. Listen to the true professionals today and not listen to all the social news media or regular news media that is bringing everybody down with the doom and gloom club, okay? No, we're not there, folks. There are people that are thriving. Our business is going strong. Businesses are expanding. I have a personal friend that owns a restaurant that doubled the size of his restaurant and included a huge catering kitchen because business is up for his catering. There is demand out there, folks. People are surviving. And if you keep your head about yourself, you'll do the same thing. Let me give you some facts. You come to us for facts. We're giving you facts today, folks. Mark Fleming, first American chief economist, says, quote, "We're still below normal levels of inventory, and that's why even with the pullback in demand, we still see home prices appreciating. And while there is more inventory, it's still not enough." Mark Fleming, chief economist at First American, right? How about Selmy Het? I hope I pronounced that right, Selmy. Hey, she's a chief economist at CoreLogic. Quote, "The current home price growth rate is unsustainable and higher mortgage rates coupled with more inventory will lead to slower home price growth, but unlikely declines in home prices." There you have it, folks. 2 gurus in our industry stating the facts. Where is people getting their information from? What crystal ball do they have that are telling us, I'm going to wait till prices come down, Ed? You just heard 2 professionals in our industry, the gurus supposedly, telling us we're not going to see that much decline in prices because there's still a demand. And who's buying right now? Folks, if you heard the reports this month in July, 78% of the people purchasing are millennials and Generation Zs. I hope you're one of them. You get off the fence. Time to jump off the fence and buy, because why are these people buying? Because they know the true value of starting their equity now. The reports again yesterday, 2 days ago, stated 20% appreciation a year from yesterday or the day before. 20% appreciation, folks. In the same report, it stated we have 20% decline in home purchases. That's obvious. Rates have increased. And then you talk about rates. Let me tell you another statistical fact. When the Fed's fund rates increases, as they did by 0.75%, folks, that has no bearing or effect on our mortgage rates. Did you hear that? When the Fed's funds rates increase, that has no bearing or effect on our mortgage rates. The Feds do not set mortgage rates, folks. Mortgage rates are backed by the mortgage-backed securities and treasuries based on the stock market on a daily basis. This is why you'll have different quotes during the week. Every day it could be a different story, or maybe not. Some days, some weeks are stable, and then all of a sudden we get a jump. We get a report out in the economic situation, and that's what happens. Mortgage rates are set by the economy and what the stock market is doing. Heck, you all lost, I've lost, we all lost money on our 401ks, right? Hey, it's just natural. What goes up comes down, what comes down goes back up again, folks. So please do not listen to any loan officer or any lender that is telling you, oh, your rates are going to increase, your rates are going to increase. No, that is a fat lie, folks. The Feds do not set mortgage rates. Another fact that we're providing you today. So what does that mean basically? What are these millennials doing this? The millennials are doing this because of the fact that they want to own homes. If you own a home, you know exactly what I'm talking about. Those of you that has worked with us in the past, right? You know exactly what I'm talking about. Some of you have asked me, Ed, should I buy? Yeah, just do it because you afford it. You can qualify, and that's what the numbers say. And you did it. 2018, we had people at rates 5.875 to 6%. A lot of you know what I'm talking about that purchased through us, right? 2020, what happened? Rates dropped. What happened to your values? Boo, through the roof. What happens when we see rates drop again? What happens to values? Again, we're going to see increases. Are we going to see declines? Not based on these facts and not on someone's crystal ball, right? No, folks, listen to the facts, please. Those who are referred to us, if you're referred to us, it's for a reason. It's to help you become approved and to achieve the American dream of home ownership, which is everybody wants, everybody's dream and goals, right? We'll help you get there, folks. So, what we want to do today in today's market is just let you know you need to be more transformational as opposed to transactional. And what do I mean by transformational? Basically knowing the benefit of home ownership that a lot of you that own a home now realize. What are the benefits? You get the mortgage write-off, you get the property tax write-off at the end of the year. That helps you. And those of you that own a home already know that. Those of you that are renting and your rent's increasing because we've seen rents increase 14%. And the bottom line is it's still increasing month by month. People paying $3,500, $4,000, $4,500 a month in rent, lowering their payment to $3,000, $2,500, maybe $2,000, depending on the price that they purchase in. Folks, it's huge. And start your equity now. Transformational is not only the write-offs, but also the benefits of owning a home, having your own place to call home. Do whatever you like, improve the place, make your own garden, your landscaping, the kids' rooms, whatever you want, you have in your own home, and you can do it. We have helped thousands of clients, and those of you listening know what I'm talking about. Home ownership is a long-term endeavor, folks. Think it that way, and you'll come above the rest of the crowd and become a homeowner. So, hey, if you like the video here and the information and the facts, please subscribe, hit the subscribe button. Please share with your family, friends, and relatives. Those of you parents, share with your kids. We're starting to see millennials and Generation Zs, but we're also seeing a lot of younger kids in their 20s coming in and basically wanting to buy it. And we'll help them get to that point of purchasing. Like a lot of you, we helped. Whether you have issues that we have to overcome, we'll help you. We just won't tell you don't qualify like other banks and lenders do. 30% of our business here is turn downs from banks, brokers, credit unions, and other lenders, folks. Numbers don't lie. We're here to help. Give us a call. 916-712-8509 or email us efontes@amerifirst.us or just apply online www.edfontes.com. Hey folks, hope you enjoyed the video. Have a great day. Be blessed.